All right, let's dive into STON.fi. It's a protocol on the open network that's really shaking up how we trade. We're going to break down the smart engine at its core and see what it tells us about where decentralized finance is headed. Let's get right into it.
So let me just start with a question. What if you could trade Apple stock at, say, 3 a.m. on a Sunday directly from your crypto wallet? I know, it sounds a little out there, almost like science fiction, but this is the exact reality STON.fi is building. Let's take a look at how they're pulling it off.
But to really get the solution, we first have to understand the problem. You see, in DeFi, there's this really persistent, kind of frustrating issue that affects pretty much every single trader. Getting the best price for a trade is just way harder than it should be.
And here's why. In the world of decentralized finance, liquidity, the available pool of assets for trading, is all over the place. It's scattered. So instead of one big ocean of assets, it's more like hundreds of separate little ponds. Every decentralized exchange, or DEX, has its own isolated pools of money. And that means no single platform has a complete view of the market.
Think about it like you're booking a flight. The fragmented way is like checking each airline's website one by one. Yeah, you might find a decent price, but you have no idea if it's actually the best price out there. The unified approach, on the other hand, is like using Kayak or Skyscanner. It scans all the airlines at once to find you the absolute best deal, period. That's the difference we're talking about. Better prices, more options, and trades that just work.
And this is where the STON.fi team comes in with their core innovation. They built a solution to this exact problem on the TON blockchain, and they call it Omniston. It's the smart engine designed to pull all that scattered liquidity together.
So what is Omniston, technically speaking? It's a liquidity aggregator. In simple terms, that's a protocol that connects to a whole bunch of different DEXs and other sources of liquidity to find the absolute most efficient path for any trade you want to make. It is, quite literally, the Kayak or Skyscanner for crypto swaps on the TON network.
So how does it actually find that best price? Well, the moment you start a swap, Omniston sends out a request for quote, or RFQ, to all the connected exchanges and even professional market makers. They all instantly respond with their best offer. Then Omniston's engine automatically picks the winning quote and executes the trade for you, seamlessly. It's basically a super fast auction that happens in milliseconds, all designed to get you the best deal possible.
And this isn't just theory. This tech translates into very real benefits for you, the user. You get better rates because you're seeing the whole market at once. You get lower slippage, which just means the price you click is the price you actually get. Your trades are way more likely to go through because you're tapping into a much deeper, combined pool of assets. And it can often find a direct route for your swap, avoiding those extra, costly steps.
Okay, so we've seen how Omniston works, but what can you do with it? Now this is where it gets really cool. STON.fi is using this powerful engine to bring real-world assets onto the blockchain with something they call XStocks.
And we're not talking about some obscure crypto assets here. We're talking about tokenized versions of some of the biggest names you know from traditional markets: Apple, Tesla, Nvidia, even major ETFs that track the S&P 500. This is a real bridge between two completely different financial worlds.
So what is an XStock exactly? Well, think of it like a digital certificate on the TON blockchain that perfectly mirrors the value of a traditional asset. Now, the absolutely crucial part is that each XStock is fully backed, one-to-one, by the actual real-world stock or ETF. And those securities are held by a regulated issuer, backed finance, which gives it a critical layer of trust and transparency.
And here's the pipeline, how it gets from Wall Street to your crypto wallet. First, a real asset is held by a custodian. Then, a regulated issuer creates a token that represents it. That token gets bridged over to the TON network, where it becomes a JETON. That's just the name for a standard token on TON. And finally, STON.fi's interface makes that JETON super easy for anyone to swap.
What this does is create a completely new kind of trading experience. Think about it. With a traditional broker, you're stuck with market hours, endless paperwork, and they hold your assets for you. With XStocks on STON.fi, the markets are always on, 24/7. There are no gatekeepers. You have full self-custody of your assets in your own wallet, and trades settle instantly. It's a fundamental shift in both access and control.
So far, we've mostly talked about being a user of the platform, but STON.fi is a decentralized protocol, and that means you can also be a participant. You can actively help power the entire ecosystem and, of course, get rewarded for doing it.
There are two main ways you can contribute to what the protocol calls its public goods. First, you can provide liquidity, which helps everyone's trades execute smoothly. Or second, you can participate in governance, helping to decide the future direction of the protocol itself.
So yeah, you can get involved in two main ways, farming and staking. With farming, you kind of act like a mini market maker. You provide a pair of assets to a liquidity pool and you earn fees from all the trades that happen. With staking, you're showing a long-term commitment by locking up the native STON token. In return, you get rewards and, importantly, a voice in how things are run.
Now, it is really important to be aware of the risks, especially with farming. There's this concept called impermanent loss. To put it simply, if the prices of the two assets you've put in a pool change a lot compared to each other, you could actually end up with less value than if you had just held those assets in your wallet. It's a really key trade-off to understand before you jump in.
So let's focus on staking for a second. When you lock up your STAN tokens, the protocol gives you two different types of rewards, and these are designed for two very specific purposes. One is for governance, and the other is for community engagement.
First up, you get something called an Arkanston. This is a special, non-transferable NFT, and it basically acts as your key to the STON.fi DAO. It is your voting power. The more STON you stake and the longer you lock it up, the more influence you have. Simple as that. Second, you get Gemston. This is a regular, tradable token, and the community, through the DAO, gets to decide how Gemston gets used for things like future rewards or other incentives.
So, with all that said, where is this whole thing going? Let's zoom out for a minute and look at the bigger picture, at STON.fi's long-term vision for a more connected and unified financial world.
At the end of the day, the ultimate goal for the Omniston engine is to create one single marketplace where every type of liquidity can compete fairly. And that includes the public liquidity in the DEX pools we've been talking about, but also private, over-the-counter liquidity from professional traders. For you, the user, all this competition means one thing and one thing only: the best possible price every single time.
And this vision isn't just limited to the open network. Nope. While the team is focused on TON right now, their ambition is way bigger. They're already actively building out cross-chain swaps, which would basically unleash this same smart engine to find the best prices for trades across any blockchain.
And that leaves us with one final big thought. We started with this idea of trading Apple stock from a crypto wallet, which is already a reality. So what happens to the world of finance when this technology expands and you can swap any asset across any blockchain instantly, all from one place? Just think about that for a second. That is the future that protocols like STON.fi are building today.